I'm not going to play the crypto.com ad because the crypto.com ad is now outdated. As you may know, what we say in the crypto.com ad is that you can get up to 8% cash back. And that is the policy that they have changed. So we will be recording a new ad. I did reach out to the representative at crypto.com for some clarification, and we got some clarification. Initially, what it had looked like on original reports is that we were going to see a drop down from 0 to 2% cash back from, of course, the 8%, and this would take effect in June. So I wanted to get some more clarification on that, and that clarification was, of course, extremely helpful because, as you can see here, what I was expecting was something that was going to be pretty bad. Why is dropping down to 0 to 2% bad? Well, it's based on card level. So if you had a low card level, essentially you would be getting no cash back, which is going to be a problem. And then in addition to that, it does hurt it from a competitive standpoint with other card offerings from places like Coinbase that offer 4% cash back, albeit through Algorand, not directly through a Coinbase token or cash back via USD. But that was going to be a competitive disadvantage for crypto.com. So crypto.com then decided to go ahead and completely reverse it initially. So this is kind of hard to go through because this all happened in one day. What we saw was a huge dump in the price of Crow, right? So let me pull that up for you guys here. Kronos went down pretty hard. This will show it right here. Yeah. As you can see, from the 29 cents on the announcement down to, I guess, the 26 cents, it really took a huge hit. I think it was even worse than that. Yeah, so up here, 39 cents, all the way down to 26 cents. And then it started to recover. So obviously, why is it recovering? Well, it's recovering because they backpedaled. The initial idea was that they were going to go ahead and reduce the rewards still, but bring it up higher to where you could get up to 5% cash back. Then they went ahead and, as of reports now, which I'm getting, they went ahead and basically completely reversed it, and staking rewards as of much as 8% will be offered to its card users, the company CEO said. So Crypto.com CEO Chris Marszalek said the firm will continue to offer staking rewards to its card users a day, eliminating the reward program. The decision had led to a vocal backlash among community members on social media, sites like Reddit and Twitter. Most common were negative and critical as reported, while the price of Crypto.com's native Crow token fell by as much as 11% in the hours afterwards. Crypto.com has since backtracked on its decision to fully end staking rewards, where card users lock up Crow for a 180-day period to earn yields. Quote, instead of eliminating card staking earn rates completely, we will offer a more balanced approach. 8% APY for private members, Obsidian, Icy White, and Frosted Rose Gold. 4% APY for Royal, Indigo, and Jade Green card holders, Marszalek said in a tweet on Tuesday morning, referring annual percentage yield, or referring to. The rewards are still less than those offered now, with some users still expressing dismay. Marszalek, however, noted the changes were necessary to ensure long-term sustainability of yields offered on its card product. Crow is down 10% in the past 24 hours. Obviously, last night we had another big pump because we're back over that, by the way. So this is a little outdated. I think overall on the past day, it was down. Maybe it's not down at all. It's back up to 29 cents. What was the up here? 39 cents. Okay, but this was back on the 29th. It's been going down since then. The big drop was yesterday on May 1st, and that was at 35 cents. So not a full recovery, no. But definitely a recovery. as we see it. So that's kind of the rundown on what's going on with crypto.com. Remember, once again, like I said, Coinbase has the 4% cash back. Obviously, that was a big snafu, but we do have to talk about what that is really signaling if we want to look at this completely objectively. And what that's really signaling is, of course, worry over bear markets, sideways market, whatever you want to refer to it as. These high rewards were put into place at a time when there was a huge bull run going. And I'm sure there's some guys in the bottom, discussing the bottom line for crypto.com and the Crow token and all of that. And they're saying we can't sustain these high numbers or these high rewards. We're going to have to bring those down to make sure that the company can survive. Obviously, that's what they're saying for long-term sustainability. This is kind of true also across the entire crypto market. It's also the reason why Bitcoin miners are now turning to debt financing as opposed to going public. Because how are you going to get the public to invest in your mining company when the markets are down? That's a little difficult. So you have to turn to debt financing, which we've been talking a lot about on this channel. What does that tell us overall? It tells us that market analysts at a corporate level, at an institutional level, are getting somewhat of cold feet surrounding the markets. And it's important to keep track of that, especially as you decide at a lower level whether or not you're going to invest in more miners, whether that be ASIC or GPU miners, or if you're going to buy, etc., and how comfortable you are with it. Of course, like I said before, in my humble opinion, what we have ahead of us is a moment of great opportunity if you're not super risk adverse. And that's not financial advice. It just means you have the opportunity to purchase a whole bunch more equipment at a lower price. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.